I'm curious as to asset classes. Which
Mhm.
are the most popular asset classes that
Yeah.
you and your team get asked about?
Yeah. So out of the 25,000 clients, over 4 billion in assets, real estate's definitely the most popular. I would say 65% plus is some real estate related investment, whether it's hard real estate, a single family home or an Airbnb or investment in a commercial property. And then there's the whole peripheral investment community of, hard money loans, real estate funds, all that makes up about 65%. The second most popular, I would say, is private stock investment. So investing in private companies, so non-publicly traded companies, right? That's the beauty of the self-directed IRA. If you want to buy Tesla and Apple, you can do that at Schwab. You don't need a self-directed IRA. That's fine. But if you want to do anything non-publicly traded, so real estate, invest in your friend's new AI company or a new restaurant, you can't do that at Schwab or Fidelity. They will not let you use your IRA to invest in anything that's not publicly traded in general. So that's where the self-directed IRA world comes in, and we can help you diversify and invest in real estate, for example, private business stock, private equity, hedge funds, venture capital, real estate funds, and then also gold, cryptos, credit funds, hard money loans, and gold and precious metals, which has come back in popularity in the last 6 months or so. That basket of investment categories are probably the most popular.
You are listening to Power Marketing with Kevin Lee. Kevin and his agency Did It have helped thousands of businesses win through superior marketing, as have his books, articles, speaking engagements, and the E-Marketing Association Power Marketing podcasts. Here's Kevin.
Hi, I'm Kevin Lee with the E-Marketing Association. I also run an agency, Did It, a nonprofit Giving Forward, and a couple of other brands and technologies as well. Super excited to be chatting today with Adam Bergman, who was the founder of IRA Financial quite a few years ago, after doing a stint as a sort of more traditional lawyer. Now he uses his knowledge of the law to help people do tax advantages strategies, particularly as it relates to self-directed IRAs. So Adam, what was the catalyst years back when you decided this is an important enough niche that I'm going to go ahead and start a company around it?
Yeah, so first of all, Kevin, thanks so much for having me on your show. Really excited. You know what? Like things in life, chance. So I was a tax lawyer, pretty sophisticated investor. I have a law degree. I actually have a master in tax law as well, and I worked at some of the largest law firms in the world. And my first 8 years as a lawyer, I had no idea you could use your IRA or 401k to do alternative assets. So I was fortunate enough to be asked by a partner I worked with to do a little research for a hedge fund client of the firm's who wanted to use his IRA to invest in his hedge fund. And initially, my thoughts were like, probably can't do this. I would have heard about this. So I remember walking to the library back in 2008. We actually had libraries, in the law firm. And I remember opening up, there wasn't a lot on retirement accounts, but I did find a tax management portfolio, small little booklet on the taxation of IRAs and 401ks. And lo and behold, guess what? You're allowed to invest in alternative assets in an IRA and 401k. And I was just blown away by how simple the rules are and the fact that it's been in the tax code since 1974. And I had no idea. So I told myself, hey, if I'm a lawyer, tax lawyer, pretty smart guy, if I have no idea, there's got to be millions and millions of people out there that probably want to do this. So I actually, literally the next day kind of started doing some research online. Within 6 months, quit my job. And a year later, I started IRA Financial. Now, fast forward about 15 years, we have over 25,000 accounts, 4.5 billion in assets. And what I realized is, there definitely is a demand for this. It's just the education factor is our biggest challenge.
Yeah, and to that point, I know you've written a bunch of books, and books are obviously a highly educational channel of communication. And most people don't think of them as a marketing tool, but I've written a few books myself. And, if I have a choice between plopping a book on somebody's desk during a pitch or leaving a business card, the book carries a little more gravitas. So I wondered, like, what
Yeah.
your thinking was behind that. Like, did you think of them as marketing tools and educational tools, or was there something else driving your book writing impetus?
Yeah, no, Kevin, it's probably a multi-factor, reasoning for doing this. So first of all, I'm a lawyer. I like to write, kind of a tax nerd, and it basically helps me put my thoughts forward, and kind of organize my thoughts. But the big part, honestly, was to help educate people. So yeah, it was partly marketing because I want people to know that I'm a subject matter expert. IRA Financial is the best company for you to set up a self-directed IRA because of the expertise involved, and also to help people and educate people, whether they want to just learn about IRAs and figure out and understand what they're able to do based off the tax code, or if people wanted to do this, I wanted to show them, first of all, yes, you can do it. Number two, this is the amazing amount of investments you can do with it. Here are the tax benefits, and this is how easy it is to do.
Yeah, I mean, I've got a self-directed IRA myself, and one of the things that surprised me was the diversity of asset classes that you could put in there, right? I mean, is it really, some stuff that would be hard otherwise to invest in within a retirement account? I think I had read somewhere that Peter Thiel has an obscene amount of crypto in an IRA, and
Yeah.
he got into it so early
Well,
that at
he
this
actually,
point, super tax
yeah.
advantaged.
So the Peter Thiel, if I can double click on that, so he's basically like an idol of mine. So yeah, he has approximately $5 billion in a Roth IRA, and actually a mentor of mine was the person that actually like brought him to the Roth IRA concept. But let me just explain how he did it, because I think that really underscores the value of using a retirement account to make investments. So Peter Thiel, he founded PayPal with Elon Musk and a few other smart investors. And here are the three things you cannot do with an IRA, and I'll explain those, and then you'll see why I'm explaining it. So all the three things are you cannot do. Everything else you can. You cannot buy life insurance in an IRA. You could in a 401k. Cannot buy collectibles like art. And thirdly, under Internal Revenue Code Section 4975, you're not allowed to do anything with your IRA that in any way, directly or indirectly, personally benefits you, your lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such persons. So that's an important threshold, 50%. So in the case of PayPal, he owned less than 50%. There was a number of investors, and he used a Roth IRA to allocate a certain amount of shares to his Roth IRA instead of himself. And he also had personal ownership, but he allocated some to a Roth IRA. He did it when the company was at the startup phase. So the company stock was pretty much worthless, less than a penny a share, par value. And he spent about $2,000 on stock. And within several years, that turned out to be worth around $27 million. But his actual big investment was he was the first Facebook investor. And instead of using personal money, he used his Roth IRA, and he invested in Facebook with $500,000 from the PayPal money in a Roth IRA. And that turned into around $400 million when it went public. And then from there, he invested in Palantir, and he invested in other investments. And now it's approximately worth $4 or $5 billion, all tax free. So in order to lock in your tax-free component and generate tax-free wealth in a Roth IRA, you have to be at least 59 and a half, and the Roth has to be open at least 5 years. So in the case of Peter Thiel, he's got a couple years left because I think he's around 57 or so. So when he hits 59 and a half, he's going to be a very, very rich tax-free individual.
Yeah, well, I think he's already doing okay, as rumor has it.
Yeah, he's a
So
smart guy.
not sure he needs the extra cash, but it is
Yeah.
going to be tax free when he yanks it out. So that's a pretty great story. I think one of the other things that came across my radar, which obviously relates to the 50% rule, is property. A lot of people want to figure out how to use real estate property as an investment vehicle, and as long as you're not living in it, or to your point about descendants and other people too close to you, as long as it's not being used by them, you're good on property. And I'm curious as to asset classes, which are the most popular asset classes that you and your team get asked about?
Yeah. So out of the 25,000 clients, over 4 billion in assets, real estate's definitely the most popular. I would say 65% plus is some real estate related investment, whether it's hard real estate, a single family home, or an Airbnb, or investment in a commercial property. And then there's the whole peripheral investment community of hard money loans, real estate funds, all that makes up about 65%. The second most popular, I would say, is private stock investment. So investing in private companies, so non-publicly traded companies, right? That's the beauty of the self-directed IRA. If you want to buy Tesla and Apple, you can do that at Schwab. You don't need a self-directed IRA. That's fine. But if you want to do anything non-publicly traded, so real estate, invest in your friend's new AI company or a new restaurant, you can't do that at Schwab or Fidelity. They will not let you use your IRA to invest in anything that's not publicly traded in general. So that's where the self-directed IRA world comes in, and we can help you diversify and invest in real estate, for example, private business stock, private equity, hedge funds, venture capital, real estate funds, and then also gold, cryptos, credit funds, hard money loans, and gold and precious metals, which has come back in popularity in the last 6 months or so. That basket of investment categories are probably the most popular.
Yeah, that's a great point. One of the other things, obviously, that it's a nuance that may or may make a difference to the folks who are thinking about self-directed is Roth versus traditional IRA, as well as understanding the nuances of when they might want to do a conversion, right, from a traditional IRA to a Roth, depending on their income of that year. So does your team also get involved in advising on that as to whether they should, take a particular investment and stick it in a Roth versus a traditional IRA?
Yeah, we're one of the only company in the space that actually not only does establishment, but we also have annual tax consulting, compliance, and tax reporting. We actually do all the tax returns as well, if need be. So yes, I actually was just communicating with a client before our discussion where this individual owned an apartment complex in Minnesota, and he was able to reduce the property tax value considerably. And he just emailed me and said, "Hey, I'm thinking of doing a Roth conversion. Can I convert this value of the property with the diminished value and convert it to Roth?" So when you convert pre-tax IRAs to Roth, there's a tax. You have to pay income tax on the fair market value of the asset you convert. Now, in the case of this gentleman, he now had a valuation that was reduced because of the real estate marketplace. And I also told him that there's something called a discount valuation proponent, where because of the fact that it's real estate, lack of marketability, you could probably get another 20 to 40% discount on top of that. And there's plenty of appraisers that will provide that to you. So the next question is, can you afford the tax, right? So yes, you now can reduce the value of the property for conversion purposes, let's say by 50%. But let's say he bought it at 200K and now it's 100K. And you do a conversion, that amount you convert goes into your taxable income on your 1040, and your tax rate is based off that amount plus all the income you made during the year. So now you have to do the math and say, okay, can I afford to pay the tax to Uncle Sam next April 15th? The answer is yes. Great. Maybe you have net operating losses, right, that you can reduce to taxable income. You also have the option of saying, okay, I'm going to do a conversion over a period of years, right? So maybe on that asset, I'll do it over 3 or 5 years so I can afford the tax. It's more palatable and it doesn't increase my tax bracket. So yes, Kevin, that's the kind of stuff we'll work with our clients to make sure they're tax planning in an appropriate way.
Yeah, you make a great point because of the marginal tax rate brackets, right? So if you convert and split it up over multiple years, you could slice it down into pieces that just keep you under that threshold, and therefore your marginal tax rate is a lot lower. So that's a great point. And clearly, somebody should probably talk to a professional to make sure that they time their partial conversions properly.
Right.
So let's switch gears to marketing a little bit, since it is the e-marketing association. And I'd love to get a sense as to, when you're chatting with your marketing team, given that education is such a key component, how you think about sort of demand harvesting, which is typically something you would use search marketing for example, where people already are searching for self-directed IRAs or keywords that relate to that, versus sort of mid to upper funnel marketing, where people are perhaps curious and weren't really thinking about it at that point in time, but they might end up being in let's say a friendly environment, like on a website that is talking about retirement or finance in some way, which could be display media or it could be social media, et cetera. So as you guys think about your own marketing budgets, and you have to sort of sit there and allocate your budgets in the most effective way, how do you guys think about this idea of just harvesting existing demand, which sometimes can get expensive because the CPCs on these keywords can get up there, right? Versus being a little bit more upper funnel and sort of catching these people early, getting them in an email list, getting them in communication with you.
Yeah, that's the challenge, right? Because there's basically a short-term and long-term approach to this, right? Like short-term is, hey, we have John or Jane that's typing in, buy real estate with a self-directed IRA. That's probably someone that wants to do something pretty quickly. And that's probably a client that we could materialize and capitalize on immediately. But then there's the folks that maybe just want to learn about this stuff because, hey, they're in the market looking for investment opportunities, and maybe they're going to find one in 6 months or a year. And that is a challenge, right? Because we do want to allocate our marketing spend in both ways. So we can target people that are actually want to engage today because they want to use our service to help them unlock their money today. But we also want to educate people to say, hey, you can do this, right? So the IRA market's huge. There's about 65 million IRAs, over $13 trillion of IRAs. Now, according to our industry, about 5 to 7% are already in alts, and the rest are in traditional investments like mutual funds, ETFs, and stocks. So it's a huge, huge, huge universe of potential clients that would want to do self-directed IRAs to diversify and invest in alts. So it's a huge marketplace. And what we try to do is we believe ultimately that providing the best content, whether digitally, whether it's through social media or through written communication, ultimately that's the best way because people are smart, right? And people, I believe, see through and can understand and can grasp when someone knows what they're talking about and when they don't. So our belief all along is let's get out the best content we can, the most accurate, try to simplify it, but also get into more sophisticated topics to show people that, hey, if you want to just learn the basics, here it is, and we know our stuff. But if you want to learn about more advanced topics like conversions, or UBIT, for example, unrelated business income tax, here's some info and we also know about it. So I spend a lot of my time on videos, writing blogs, and writing books, because for me, that's the best way I can help educate people and get the message across that the self-directed IRA is an amazing way to self-direct your retirement future, diversify, gain investment freedom in a tax-efficient way.
Great. Yeah, it's interesting you mentioned, you're so content centric because, it used to be that people were thinking about content purely in sort of the PR, social media, and SEO buckets. But now with chatbots, right? I just gave a session last week at Silicon Valley Bank here in New York on generative engine optimization, which is trying to optimize your content to improve your chances as a business of showing up when somebody asks ChatGPT. And I don't know if your team has started to look at your analytics, but we see that, people are starting to see source equals ChatGPT on a lot of their inbound clicks, and or Perplexity or one of the other chatbots or Claude. They don't all necessarily tag their inbound clicks, but just anecdotally, you can also ask your prospects and customers, where'd you hear about us? And the early adopters are certainly, moving into asking chatbots questions and not so much the 10 blue links. 10 blue links aren't dead yet, but I'd love to hear your thoughts about, have you started to think with your team about, let's the chatbot side of information discovery as a secondary, form of discovery?
Absolutely, 100%. You have to. So what we've done is, we've kind of looked at what these agentic, models and the chat GPTs, for example, are looking at, and what type of questions are answering and how they're giving back the answer. And ultimately, I do think whether it's Google, Bing, or ChatGPT, Claude, whatever it is, ultimately they want to give the user the best answer. So that goes back to my initial thought is, and our belief is, you put out the best content, and whether it's Google or ChatGPT, they're going to recognize it and they're going to share it with the user, because ultimately their goal is to provide the best, most accurate, and most detailed information to the user. So it's, again, I think they do it really well, and I think ChatGPT will, AI and Gemini will end up doing it better than the traditional Google searches. But it's all about providing the best answers to the queries, and that's what we focus on is making sure we can get out the most detailed, the most sensitive, and honestly the most updated content possible.
So one of the things that we advise folks do a lot under the Did It umbrella, when I'm wearing that hat, is co-creation of content with other folks, right? Because obviously you happen to be a great writer, and there may be other folks on your team who are great at content creation, whether it's video-based content or other forms, but sometimes there is value to co-creating content with others the way we are here, right? And that now not only do we borrow each other's brains, but we borrow each other's social networks. So I'd love to hear how you're thinking about that, within the financial community, or if there are sort of tangential markets, for example, the real estate market, given how important real estate is to you, right? Have you started to co-create content with brokers or with thought leaders in the real estate industry?
Yeah, we're definitely focused on that. One of the reasons I'm excited to hop on your show is to help educate your listeners and viewers. And that's kind of what we're doing, right? We're kind of like co-branding, educating people listening on IRAs and marketing. So we're kind of joining, marrying our thoughts and ideas, and hopefully educating the listener. So yes, it's super important, because as you mentioned, it's one thing to just give information in my industry on what an IRA is, a Roth IRA, but you got to marry it with the investment, right? Because the IRA without the investment doesn't mean anything. So it's super important for our industry and for me to connect with folks in real estate or different industries, so we can put our minds together and come up with very intelligent and interesting content for the listener.
So within your market, obviously there are going to be whales like Peter Thiel, and there are going to be sort of everyday Joes and moms and pops, that some of whom may think that, oh, well, self-directed IRAs, oh, that's only something that multimillionaires do. It's not something that I should be doing. And how do you overcome that bias that they may have just come up with on their own?
Yeah, I always, going back to Peter Thiel, he started with $2,000. So you can start with under $10,000. Now, of course, you're not going to be able to buy a skyscraper in New York City with $10,000, but there's stuff you can do, whether it's Bitcoin, Ethereum, whether it's gold, whether it's investing into some small private businesses, maybe it's doing a hard money loan. You can start. And the beauty of the retirement system, something I should have talked about at the outset, is compounding returns, right? Your money grows faster when it's not subject to tax. Assuming the rule 72, assuming a 9% rate of return, your money doubles every 8 years. So of course, we all have to start somewhere. You all have to start small, but if you trust the process, you're consistent, you make contributions to an IRA or 401k, your money will grow, and it's guaranteed. The numbers don't lie. Albert Einstein said compounded returns is the eighth wonder of the world. It's true. So we all may not have 5 billion, but we all could potentially have 500,000 plus tax-free in an IRA. That's doable for all of us.
Right. So another thing that we sometimes hear with clients that we have to sometimes debunk is the idea that email marketing is dead and email is dead, right? But we still find that for a lot of marketers, when they're trying to continue to educate their prospects, that getting them to opt into an email list that isn't too salesy and is fairly educational can be a really great tool. I'd love to hear how you and your team use email for that purpose.
Right. We have email newsletters. Email works really well for us because folks that actually want to get a bit greater grasp of the content, it's hard to do it on a text. Whereas email, they can get the newsletter and they can read it and they can click on a link and learn more about the article or the subject matter. So yeah, email is super important. It's a great way to share blogs or videos or podcasts and add a little bit more depth to the topic versus like a 5-second, short video or a text, which, just gives you a link or just some basic info, but it's not giving you anything more.
So in-person marketing was sort of out of vogue, obviously, during the pandemic. But for certain industries, sort of in-person is back. I'm curious whether the financial services industry is sort of re-embraced in-person marketing, or if a lot of it is still sort of Zoom meetings, virtual, email, digital kind of thing.
It's definitely trended more digital, but listen, in a perfect world, I'd love to meet, every client of IRA Financial and have a chance to talk to them in person. But we have a national business, clients in 50 states. It's impossible for us to meet everyone. We just couldn't scale our business. We couldn't provide the service and use technology in the more effective way. But we are looking to now do kind of an annual user conference, which we were going to do, and then the pandemic hit. We kind of put it on hold, and now we're getting back to that because I do think it's super important to connect in person. Zoom's great, and text and email and phone is wonderful too. But you get a different connection when you get to talk to someone in person and have that personal connection. So that's something we're definitely going to be doing. Can't do it on a day-to-day basis, but on an annual basis, and get thousands of people in a room to kind of connect with each other. I'm excited for that.
Sure, sure. Final question. Are there any marketing channels or marketing techniques or strategies that you think people should be thinking about now that perhaps they're not thinking about?
I think just staying true to what you believe in, and just really putting out the best of content, whether it's video, blogs, emails, texts, whatever you're doing, just make it the best you can do. And I think it will resonate. I do believe, like, if you produce it, the value will come. And sometimes it takes longer than you want, but I do think the talent rises to the top, and people are smart and they can see through and understand when something is right and true versus something that doesn't really dictate the truth. So I would just stay true to what you believe in, and just focus on the quality of the content over everything else.
I guess the quick follow-up question on that is, some lazy marketers have started to rely on AI to generate the content for them. And, it doesn't look like the search engines are quite as enthusiastic about AI-generated content, although there are success stories out there of people being able to generate AI-generated content. So is your philosophy like to really cement yourself as a subject matter expert, it should be authentic content generated by a specialist?
Yes, I think you can use AI in a way to say, hey, review what I've written, make sure grammatically it works, or like some suggestions for wording, things like that. But to have ChatGPT write your blog, no, because first of all, 20% of it's wrong. So that's the first issue. Number two, it's not going to be authentic, right? It's going to read really well, but the consumer is going to see it's AI. You can see through it. So I know when I get an email from someone, even a friend, and I'm like, that's not you. There's no way you wrote that. So, people are smart. I think you're going to have to write it yourself, but it could be a great editor. It can really help and give you that benefit, but you're going to have to write it yourself.
Absolutely. Well, thanks, Adam, so much for sharing your wisdom with myself and the audience. Certainly appreciate it.
Pleasure, Kevin. Thanks for having me on.
Kevin Lee's Power Marketing is available on all your favorite podcast networks. Kevin loves helping businesses excel at marketing. Having marketing challenges? Just like Santa in The Miracle on 34th Street, if Kevin can't help you, he'll know someone who can. Find him on LinkedIn, subscribe, or follow.